So guys, if you're in between the ages of 25 to 55 and you're interested in investing in real estate, well, that's probably why you clicked on this video on how to earn real estate income tax-free without any work required. Like no BS, I figured it out on how to earn up to 81.9% return on your real estate investment without doing any work. Before we get started on how to earn real estate income tax-free without doing any work, I gotta start with a story. Now, those of you guys who have been with me since 2021 when I started this channel know that I am knees deep into crypto. And back in 2021, it was exciting, right? Because it meant freedom, decentralization, right? So the man cannot get you. And I really neglected my retirement accounts. And only until recently, I started looking into my retirement accounts, and then I had a small tinge of regret. And you know, guys, it was a mistake. I admit it. I'm human. I'm not perfect. I make mistakes. It was a mistake to not contribute to my retirement accounts, especially my Roth IRA, because if you don't use it, you lose it year to year, right? Those of you guys who are familiar with my story know that I've been in the US. I moved here officially in 2016, and I asked ChatGPT to give me the total amount that I could have contributed if I started when I moved here in 2016. And this is what it gave me. And I'll also give the amounts for what it gave me if I was 50 and over, right? Because the contribution amount if you're over 50 is different from when you're under 50. So to give you guys a quick recap on Roth contribution limits from 2016 to now, because I came here in 2016. 2016 and 17 are the same. It came in at 5,500 if you're under 50. If you're over 50, it is 6,500. For 2018 to 2022, if you're under 50, it is 6,000. If you're over 50, it is 7,000. And for this year, 2023, if you're under 50, it's 6,500. If you're over 50, it's 7,500. So when it comes to IRAs and Roth IRAs, you can contribute up to April 18th or 15th, depending on when the deadline is for filing your taxes, right? So for 2024, you have until April 18th, 2024 to contribute to your Roth IRA or your IRA. It's the same deal for the 401k. So since I missed out on contributing to my IRA for all the time I've been here, it's basically a total of 41k that I missed out on. So for all of 2023, you can be sure that I'm definitely going to max out my Roth IRA. That is 6,500 for me and 7,500 for people over 50. So I'm not sure about you, but I'm the type of person that really likes to mull things over and really make it hard for myself when it comes to things like this, because I know that I missed out on contributing to my IRA, right? 41k. And to give you a sense of that, they give you a catch up when you're over the age of 50. So after 50, if I play catch up, it'll take me 41 years based on today's numbers to catch up, right? Because I have 41k and each year I can contribute 1,000. So it's basically meaningless because asset prices is going to go higher and higher as time passes each year, right? And I am like 99.99999% sure of that. So that's just my way of saying, if you're in this situation right now, the best time to act is now. Don't procrastinate. So where you start an IRA will be based on what you are interested in investing in. For me, it's stocks, ETFs, and real estate, right? So I am starting an IRA with Webull, and if you don't have a Webull account, check my description below where I have a link for you to get started with a Webull account, because if you start one there and pay any deposit, you can get up to 12 free shares. Guys, that's free money on the table, and you never leave free money on the table. Other than that, I'm starting an IRA, and I already have started it with Fundrise, which is kind of like a real estate crowdfunding, which I've already started, and they also allow you to get started with an IRA. So that's the real estate part, which is what this video is about. Now, one thing that you have to remember is that you can't put 6,500 if you're my age, under 50, on two accounts with the same year. That means you can't go and open a Webull account, put 6,500 for your IRA there, and then go to Fundrise and put 6,500 there. It has to add up in total to 6,500. So right now I put 3,000 on my Fundrise. That means that I can put up to 3,500 on my Webull IRA when I started. So back in 2019, mid 2019, I got started with Fundrise. So I'm familiar with them. And I started with an initial investment of $1,000, and I made an auto reinvest every time I get paid every month, right? I put in $250, and I kept that up until basically the beginning of 2022 in January. That's when I closed my account, right? So at that point, it's been like about 30 months of investing, 250 every single month. So 30 times 250 plus the 1,000 basically made my balance at about $8,500. So at the end of that, my dividends for Q4 2021 was $41.42, which makes it about like $10 a month, which isn't bad at all. And this does not count appreciation. The sad thing about this was not a Roth IRA of any sort. It was just a plain investment account. So I got taxed, and I know that was dumb, but you know, we live and learn. So let's do the math. We're gonna max out our contributions. If you're under 50, that's $6,500. If you're over 50, that is $7,500. And we're not gonna take into account increases here, which they will probably do. They'll probably allow you to increase the amount that you can contribute into your IRAs in the future, but we're not gonna take that into account for these calculations. So let's do some fun stuff and do some planning. This is a calculator from HughCalc for employee drip, and you can use it for real estate as well. So your principal investment balance amount is going to be $6,500 because that's the max limit. Now, if you take $6,500 and divide that by 12, you're just going to get this done in 12 months and not 16 months. So that gives you $541. So you can just keep the company price of stock at $1 because we're not really dealing with stock. So this is just accommodated for real estate. The number of years to invest is going to be 20 years. Current dividend yield, according to Fundrise, we're just going to use 8%. That is pretty conservative. DRIP, it's a dividend reinvestment plan. That means you're going to keep reinvesting your dividends. You're going to put that as yes. Taxable, no, because it's an IRA, right? So it's going to be tax free. So with that said, at the end of 20 years, your dividends that you're going to get for year 20 is $23,769.70. And the end balance of that, of your account, will be $327,000 and $382.89. That's pretty incredible. Now, if you're over 50, can contribute more, right? $7,500, which breaks down to $625 per month for 12 months. Everything else is the same. And at the end of 20 years, your dividends per year is going to be $27,457.18. The ending balance is going to be $378,171.91. So that's like $4,000 more dollars. So that is pretty good. So I just gave you a plan that ensures that you don't draw down on your retirement account. This plan will allow you to keep printing money versus other plans, other retirement plans, which projects that you're gonna die at 89, and at that point, your retirement account is going to be zero. But what happens if you overlive? You pass age 89, you're age 90. Then what happens? You have no more money. You're gonna live on the street. And that is why this plan is a plan that I am more assured of than IRA plans that include stocks and ETFs. And that is because of this one thing that we'll discuss next. So you guys all know that saying that there are two things that are certain in life, death and taxes. But I put the price of real estate going up as a close third with 95% assurity, because people would rather starve than lose the roof over their head, right? As house prices go up, then I'm sure that the rent prices and the mortgage prices will all go up as well. Like, did you see your rent prices or your mortgages go up post-COVID? Because I certainly did. And if your work isn't paying you enough to keep up with inflation, this is a way for you to keep up with inflation, because as rent prices go up and as mortgages and home prices go up, that means that the dividends that you're gonna get from real estate, that's also going to go up. So that is the way to keep up with inflation, if that is what you're worried about now. So remember that for today, our calculations didn't take into account inflation and dividend appreciation, which is all very likely to happen in the future. But right now, in order to live a luxurious lifestyle in Bali, Indonesia, it's about 2K per month. So looking at our calculations, we can basically live a very comfortable life in Bali, Indonesia with the current dividends that they'll pay out at the end of 20 years. Now, if you want to learn about the best ETFs to include in your IRA if you're thinking about that, check out this video here that I made on the 6 best ETFs. Other than that, if you guys want to learn more about how I saved $17,319 on taxes using ChatGPT, check out the video right here.